Welcome to Paging Financial Freedom, a podcast about doctors and spouses and the journey to financial freedom through real estate and tax savings. I'm Dr. Daniel Shin, a surgeon and real estate investor. You might know me on social media as the Darwinian Doctor or the founder of Serious Real Estate.
And I'm Lila Kaplan, former Wall Street professional, certified financial planner, and the person on a mission to retire my orthopedic surgeon husband in the next 5 years. I specialize in apartment investing, helping doctors and their families build true financial freedom beyond their W-2 incomes.
If you're interested in achieving tax-efficient financial freedom through real estate, you're in the right place.
Let's get started.
Hey everyone, welcome to another episode of Paging Financial Freedom. I'm Daniel Shin, and as always, I am joined by our co-host, Lila Kaplan.
Hi, Daniel.
Hey, Lila, how's it going today?
Everything is good. Happy Valentine's Day.
So we're already a couple of months here into 2026, and just housekeeping-wise, just wanted to let everyone know that we're about to start inviting guests onto the podcasts. We've mainly been talking just the two of us, but we're going to start inviting guests, and we're sort of formalizing things over here. So we should start having a very regular cadence of episodes very shortly.
Yeah, I'm really excited about our guests that are coming up, and they're going to give us so much insight on how they're pursuing their financial freedom. So,
yeah, totally excited about that. Do you want to just give us a quick update of what's been going on in the world of Lila Kaplan, in terms of real estate and everything?
Yeah, sure. I mean, we've just started the year, so we're looking for new deals, and I'm pretty excited about 2026 and what it has to offer, given what's happening in the market, whether it's politically or economically. I believe 2026 is the year to get really good deals at the moment. We're seeing still a lot of distress in the market. We're seeing interest rate coming down. And we're seeing some of these bridge loan investors that need to get out. At the same token, we are competing with a lot of institutional buyers who have been sitting on the sideline, but now are popping out, to buy not only a single multifamily portfolio, but really multiple multifamily portfolios. So for us, we're still relatively small compared to the Morgan Stanleys and the BlackRocks. So that's kind of the challenge that we are dealing with at the moment as we're looking for opportunities in 2026. What about you, Daniel? What's happening in your world?
Yeah, I feel like I've been just running like crazy ever since the beginning of the year. And in terms of, what's going on, for example, I'm in the middle of a capital campaign right now for a deal in Phoenix. And I can talk about that because, by the time this airs, it'll be closed essentially. And it's so interesting in terms of the raising process. This is with an established sponsor that we worked with in the year prior. But I think there's a little hesitancy amongst my investors about the market of Phoenix. And it's like contrasting to what I understand, which is that I feel really firmly like you that we're at this bottom in terms of valuations, and it's this golden window of opportunity, even in places like Phoenix that got oversupplied. But I think it's fighting against a little bit of hesitation there. So we do have some sort of news and current events that we're going to go over in just a second here, where we're going to talk about that. But yeah, I think that's been a lot of what's been taking up my time. Certainly our deals from last year are, progressing nicely, but balancing investor calls and locum tenens work and running the real estate fund, definitely been staying busy over here.
Yeah, it's not easy trying to balance both jobs. And I don't know which one's your day job anymore because you're halfway retired anyway. So Daniel, what do you believe is going to happen this year? I know there's no crystal ball, but what's happening? What do you think the market will do at the end of 2026?
Yeah, absolutely. And, certainly you're right. There's no crystal ball, but there are things that are kind of already happening that we can extrapolate to likely continue for the rest of the year. So, I put together this newsletter that I'll be sending out to my guys. And one of the big themes at the top here is talking about what they're calling the credit thaw, but basically the Mortgage Bankers Association is forecasting that the total commercial mortgage originations will surge by 27% to over $800 billion in 2026. So what does that mean for us in plain English, do you think, Lila?
I mean, that sounds pretty amazing. For the last few years, they have been very hesitant about allocating any financing. And as you know, lending had been extremely restrictive in the last few years just because what had happened prior years. And plus with all the distressed properties. And so even during my last financing in the multifamily, we had to be interviewed. We had extra paperwork. I mean, it was just a lot more requirements by these agency lenders at the moment. So hopefully they're going to be a little bit more lenient. I don't think so, but at least from the surge, I feel like there's going to be a lot more transactions by the 20 end of 2026, if not into 2027.
Yeah, I think you're absolutely right. And I think some of it is also the determination by a lot of these lenders that they have to start cycling the capital again. They can't just keep on giving extensions to some of the current debt owners. So, probably they're going to be closing out and foreclosing on some stuff and offering new capital to new buyers, which brings us to the next kind of conclusion. And, in the crystal ball is that what do you think, Lilac? Because I firmly believe that, at least for now, we're somewhere near the bottom of this real estate cycle for multifamily. What do you think?
I've been talking to my mentors and my other business partners about this. Are we at a bottom? Are we not at the bottom? We'll never know until we retrospectively look back. But I think we're pretty much hitting the bottom as I'm looking at the Dallas market. I mean, we definitely have a lot less new construction permits that's being handed out. There's a lot more absorption in Dallas as well. So we're actually at about a negative number at the moment in Dallas. Rent is stabilizing. It's not increasing, maybe slightly down still, but we're getting to a point where it's more stable. A lot less concessions that we're seeing as well in at least the Dallas market, and I know in several other markets as well. Maybe not in Austin, but Austin is still dealing with the oversupply of inventory at the moment. So with all of these factors, I think we're pretty much hitting the bottom, if not, by the end of 2026. I believe recovery is coming soon.
Yeah, and I think it's so interesting because maybe we have to be specific about what bottom we're talking about because, there's a bottom in terms of the, entry price into new purchases. And there's a bottom in terms of where the rent is going to be. And I
Occupancy
think
rate.
occupancy rate is,
Mhm.
vacancy, right? So, specifically talking about, Phoenix, for example, where, I'm concluding this capital raise, it's been very interesting. So when I was looking at the CoStar report, rent is probably, going to drift down even a little bit more this year in 2026 before it stabilizes and then starts heading back up. But there's this concept where, there are different indicators and like, when is the best time to get the best deal on purchasing something? It's probably right before rents start going up and people kind of turn around and they start getting excited to put more capital into it. So, to put some hard numbers behind that, I was looking at the data and it said that back in the peak, retrospectively, we can look back and say that 2022 was a high. The average per unit price for multifamily in Phoenix was around $300,000, which is a lot of money, right? It's an expensive market. And then, this deal that I'm concluding, it's the per unit price is around $175,000. So it's like 40% off. So, unless we all think that we're going to somehow magically drop by 50% like we did after 2008, I think we're probably somewhere close to the bottom.
Yeah, and that's exactly what I'm seeing as well in the Dallas market. In my last deal, we bought the property at 34% below, and not even below the peak where it was, but really below the current market. Partly is because the seller was still distressed and had to get out pretty quickly from these bridge loans. And that's where we're still seeing. And I think these bridge loan maturities will basically finish by the end of 2026. The financing will be reallocated to other deals. And from 2027 and on, we're going to see, more of a stability, if not an increase, not only in price, in rent, hopefully, but also in the occupancy as well.
All right. And sort of last piece of sort of news to think about is what do you think's going on in office?
Ooh, that is a hard prediction. I am not really in the office space, but I feel like the office sector is still in some type of historical crisis at the moment. I do work with a couple of commercial lenders or commercial brokers here in Denver, and we're seeing a lot of these boutique offices being built out instead of, these major tech centers, if you can call it, or business districts. So I don't know, slow recovery, but I feel like the offices and the corporations will start to pull their people back. I personally love being in an office because I can't work at home. And I am hearing that a lot more banking, finance, and other corporations are slowly pulling their people back in, and that should help with the prices.
Yeah, it's interesting. The headline from the newsletters is that it's still an office apocalypse, and when I talk to seasoned investors, they're like, they're not touching office with a 100-foot pole, they're staying really far away. And I think the real wild card there specifically is actually AI because, like, first of all, there's remote work, and even though I agree, I'm like much better in an office environment for focus and I like the collaboration in an office. Sometimes it's nice being remote so you can, take care of things during the day, sort of in your breaks and things like that. So certainly there's a lot of reduced office utilization because of remote work. But then there's this whole, secondary factor of artificial intelligence, and is the office work going to be offloaded now to an agentic AI agent? So it's like,
That's what's happening in California, right? With these software engineers. They train, for 4 years in university to come into a job that they were pretty much guaranteed to have. And now a lot of these senior level software engineer is passing the junior level to AI, and now there's no jobs. So that is a crisis in itself.
it's such a far-reaching thing. And actually, we should make a note to do a whole podcast or two on what we think is going to happen, to medicine and to real estate with AI. I literally spent 3 hours today trying to vibe code an app to find out where I should put my 1031 capital. And that was an experience. I'll tell you about it later. But in any case, kind of bringing this to a close, from what I'm hearing from you is, we're probably at a bottom in terms of multifamily valuation. The credit markets are unfreezing in 2026, and probably we should stay away from office.
Yep, absolutely. And what's really interesting that I read recently, and I've been looking in the sector for a couple of years now, is actually the medical office space is the only sector of real estate that is actually providing a great ROI at the moment, risk adjusted, of course. So I'm really interested, and I'm still very interested in acquiring maybe a medical office space, whether it's for single tenant or multi tenant. So, just looking around and see what other opportunities are out there. And I would say this opportunities comes from anywhere, everywhere, at any time. And so, what I learned based on my stint in on Wall Street is that you never speculate the market because you can't. You don't know where the market is going. And similarly, you shouldn't speculate in the real estate space because even though we've been going through this recession with real estate, we, both you and me, have picked up pretty great opportunities that people didn't think existed. So, no speculations.
Totally right. No speculating, but making informed analytic judgments, I think, based on the data is always what we should be doing. Well, all right. Well, thanks so much, Lila, for touching base on this podcast. I'm really excited to be having some guests on in the near future. Until then, I'll talk to you next time.
All right, Danielle, take care. Thanks for tuning into Paging Financial Freedom, where we help doctors and spouses like you take control of your finances, invest smarter, and build a life by design.
If you enjoyed today's episode, don't forget to subscribe, leave us a 5-star review, and share this with someone who needs to hear it.
And remember, financial freedom isn't just a dream, it's a decision, so let's get there together.